Well, top of the morning to you. It is Tuesday, March 4th, and boy, do we have a lot to talk about today. There's our contact info. Would love to hear from you. Let's go ahead and get after this if I can get the slides to move here. There we go. Probably should have put some more bullets on here, but so we got tariffs. The North American tariffs start today. Apparently this time he wasn't kidding. At least so far, we have 25% tariffs on Canada and Mexico. 10% on the energy products that we get from Canada, another 10% on the China tariffs, which gets us to, I think, generally about 38% is what I was reading this morning. I think Trump, they already had some tariffs on different products between, I think, 5 and 20%. And then he has hit them now with a 10% tranche on 2 different times. So I suppose let the trade wars begin. We've also got an announcement here on the reciprocal tariffs, which start, was it April 2nd? My understanding of that is that there are still investigations going on as to what those are going to be. I don't think we've announced amounts yet on that one, have we? Anybody hear about that?
I don't think so. They're still going through all the process of gathering them all, because my understanding was if it was a 7.5% tariff from country A, we would be 7.5% back to them.
Mm-hmm.
So it was going to be a very equal, level playing field is what he was looking for there.
Yeah, so I guess we're still investigating that, but those are a go-ahead for April 2nd from what we're reading. Probably should have added another bullet. I got the crop insurance prices set. That one has almost taken a back seat. But we had a huge, I say huge, it's normally no big deal. I was talking to Nate and I were talking about it this morning. We get this USDA or NASS. NASS is a part of USDA that does the crush reports. And that always comes out 2+ weeks after we get the NOPA crush report. We usually don't pay a hell of a lot of attention to it because, you almost know what the hell the numbers are going to be based on the NOPA crush report you got 2 weeks earlier. Boy, howdy, was that not the case this time, and I'll show you that one. We had a massive build in soybean oil stocks in the month of January, which I guess that didn't surprise me. The reason it's a surprise to me and everybody else in the market is because the NOPA crush report didn't show it. We had a very minimal stocks build from NOPA. I've been advocating, as you know, that I thought we would see a very large stocks build in the first calendar quarter of this year. And when I saw the NOPA number a couple of weeks ago, it's like, well, that must not have been right. But lo and behold, maybe it is. So still don't know the difference. We'll show you the numbers here, but that was a big about phase. And I think the poor soybean oil futures market doesn't know today whether it's on foot or on horseback, because that's a very bearish oil number, and I think a big contributor to the downdraft yesterday. We were down this morning, but then with the tariffs coming in, obviously a lot of canola oil flows across the Canadian border into the U.S. And so does this mean likely more soybean oil demand, because canola oil just got very, very expensive? So I don't know, a lot of moving parts here, shameless plug intended, going on. But let's get into it here. We'll look at some of the numbers. I'll show you the table and some of the resulting crop economics here. I've already talked about tariffs, I suppose. The interesting thing, and I think this is kind of the foundation behind last week we'll talk a little bit about the Outlook conference data that we've got here. That we got last Thursday. USDA is forecasting a big bump in corn area at the expense of soybeans. Why is that? Well, it's just more profitable to grow corn right now. I'll show you the economics in a second, but the insurance price for corn, and I should probably expand on that. So we have crop insurance in the U.S., subsidized by the taxpayer to a degree. The farmers have actually a revenue guarantee, and the price component of that revenue guarantee is the average futures price for new crop corn and beans during the month of February, which just ended last week. And so we now know that the corn price to go along with that is $4.70 a bushel. Now, that's not extremely lucrative, but it's a little bit higher than last year's price. While soybean prices were $10.54, that's over $1 a bushel less than year ago price. And let's just kind of jump into that here just a little bit. So here's the prices. You can see here in the left-hand box, and this just gives you a little bit of history, actually more than a little bit of history. It goes back all the way to 2011. And you can see that corn price is actually up 1% while we lost 9% in the price of beans. And here's your resulting economics over here. Now, this is, I think, the Iowa State data. It's a little generic because it's just the generic return for corn versus the generic return for beans. These change a little bit if you're planting corn on an acre of ground 2 years in a row, or beans. But you could see that you could actually make a little bit of money, not a lot compared to a few years ago, but you can make a little bit of money growing corn. Can't grow beans at these prices. Corn profitability is actually up $50 from last year. Now you may ask, well, with corn prices only going up 4 cents, how did the economics go up 50 cents an acre? Excuse me, $50 an acre? Well, the reason is fertilizer prices, a lot of other things have dropped along with it. And so it's much more lucrative to grow corn today. You're actually growing soybeans at a loss. So I think a lot of people there, the whisper number, matter of fact, let's just look at the USDA Outlook conference stuff here. Well, I guess I got that. I'll get to that when I get to the individual slides because I got it behind the corn slide and the soybean slide. But the USDA is forecasting approximately a 3 million acre swing out of soybeans into corn. We showed you the trade guest data last week on our call. A little bit slightly more of a swing than maybe the trade was looking for, but not significantly. But I think the whisper number and the fear here going into the planting intentions report that we'll get at the end of this month from the USDA on March 31st, is it might see even a bigger swing to corn. And so we'll see if that actually comes to pass. Huge price changes last week. Big downdraft, as I'll show you, in the price of corn, the price of beans, but especially corn. That has kind of continued this week and accelerated with the tariff talk. But like I said, we got a lot of stuff going on here. We could have used the Bull Durham slide again, the meme, although that was a pretty funny meme you found, Scott. You get a tariff, and you get a tariff, and you get a tariff.
It's always good.
It's always good. So let's talk about the NASS crush report. So what you're looking at on the left is the monthly crush rates for the 12 months of the crop year starting in September, and you get a little bit of history. So the gray bar is the prior record crush rate, most of which we set last year. The little blue dashes are the last year's rate, and you could see that in 9 of the 12 months last year was a record crush. And then the red bar is this crop year. So we have set a brand new record crush rate every month this year for that particular month. The December was an all-time high for any month. And so we got another, again, not a record, not beating the December number, but a record for the month of January. And we'll continue to do this, I suspect. But this was not that big a surprise based on the NOPA number. This was the shell shocker right here. The NOPA oil stocks only went up, 38 million pounds, I think. The NASS number that we got yesterday jumped over 400 million pounds. I'm going to have to go back and look. That might be a record stocks build for a single month. That tells me that we got something is probably wonky with the data. You know, we were talking before we started the call about what this could be. Could it be companies jumping out of NASS into NASS, all this new crush capacity coming on? Somebody new didn't know that they had to count something that they didn't count, and then they found out they were supposed to. I don't know the answer to all this yet. We're going to try to dig into it, but
hey, Dave,
that's a big number. Yeah.
What I didn't look at it real close because we just started looking at it this morning. But how did the crush number compare on the NOPA versus the NASS?
I think it was higher than expected, but you know, directionally it is the same as the NOPA. We're down. Just looking at the red bars there, we're down a bit from the NOPA number, the NOPA number was down a bit January from December, and we're down a bit here. So directionally, that's about the same. I suppose you could say directionally the oil stocks, but that is a massive, massive build in a single month. Like I said, I have to go back and look. That could be a record build for any single month. So I suspect a data issue. Was the NOPA one wrong? Is this one wrong? Is there something else going on here? I don't exactly know the answer to that, but we'll try to dig it out. But that's what's one of the reasons that we had the significantly lower soybean oil futures market yesterday. So let's go ahead and get after it. Big down day or week in corn. We were down over 35 cents, 7% last week on May corn futures. Why the big downdraft? Well, we talk about the speculator a lot, and I am not going to lay this completely at the feet of the speculator. I'll show you the spec positions, but we have been talking for several weeks about this very large speculator long position. Now, you've also heard us say before that the spec almost never starts a price move, but they will often jump on the back of a price move and ride it even further than it would have normally gone. The spec was really long. Means they're betting on prices continuing higher. We had stuck, remember last week we showed you May futures closed the week prior above $5. Why did the market start down? Well, honestly, I think we were probably a little bit overbought on the way up anyway, and probably you've heard me make the comment that to stay above $5 or go further above $5, we probably need some other bullish piece of market information. Well, we didn't get it. This page is going to show you rains are better in Argentina. We're getting the safrinha corn crop planted just in decent time down in Brazil. And on the bearish side of the ledger pad, the elephant in the room right now is these damn tariffs. And remember, Mexico is our largest export customer for corn and soybean meal. And so I think you throw all that stuff in a pot and you get a corn price market that is moving lower. And the SPAC, whose money is now the pile of chips they have in the middle of the table, is now getting smaller, starts bailing out of their long positions and liquidating that big short pretty quickly. I think that's kind of what we're seeing here. I think it's a combination of all those things, but I think that the better weather in Argentina, and probably bigger than that yet still, is the tariff thing, is probably the fundamental catalyst that got this market heading south. So I think the other one is that third bullet on the top of this. We talked about the Outlook conference stuff. Matter of fact, let's just go to that and I'll show you. With normal weather next year, and again, that's a big if, we got a growing season to get through here. The USDA showed us a sizable jump in corn planted area from about 90.6 last year, up about 3 million acres. Actually, that's Bill's number at 93 and a half.
Right. It's 94.
USDA's at 94 million acres, right? And so you got a big jump in expected corn planted area. Like I said, the whisper number, people are talking about, could that jump to corn be even larger? I suppose it could, but this is another one of the variables, I think, that got the corn market heading south. There's your safrinha corn planting. Problem? Month and a half ago, we were talking about the very historically low start. Well, we kind of caught back up here. Now, we're kind of a little bit outside of the normal planting window, but we have found ourselves back into normal. We got about 2/3 of this corn crop planted in the ideal planting window, which is generally prior to the 20th of February. But we look to be in pretty good shape there. Scott, what's going on in the wheat market?
Well, we're going down.
Wheat prices took a thrashing last week.
And they're continuing today. You see, last week we were down 8% across all three. Through yesterday, we were down over 10%. If you look this morning on the overnight session, we're down probably about 13% from those highs that we had just a couple of weeks ago on the 18th. In fact, the Chicago contract this morning has equaled the interim low, the contract low that we set back in January.
Wow.
Yeah, you're actually below that in Minneapolis. Kansas City has a little bit farther to go, but yeah, it's kind of the quickest place to go is down. Our exports are kind of sucky, although I think we still get to Bill's number by the end of the year. We've got essentially 3 months to go until we get to the end of the marketing year. Our conditions, bit of a mixed bag. As I've told you, we don't get weekly conditions throughout the winter months, but we do. Most states will report a monthly number at the end of the month. So we had the final numbers for February, and it was kind of a deterioration across most everything you saw. Now, as you look across these hard red winter wheat states that I focus on, Kansas was better by 4 percentage points, and Colorado was up 10. So that's good. Obviously, Kansas is our largest hard HRW state, but everything else was down. I would not be terribly concerned about them being down because that's normally what happens in the winter months. But look at Nebraska and South Dakota. That's really, really not good. We are very, very dry here in Nebraska and certainly up in South Dakota, and that's a little bit concerning. We'll have to see how March and April and May do. Turning our attention to the world,
we have some moisture coming tonight. Might be going sideways, but it's coming.
That's true. We did get a little bit of rain last night. We got some snow on the way, so that can't hurt. Turning attention to the world, the big news last week was Australia. You have heard me say, why didn't USDA move their Australian number higher? All of the privates had moved their numbers higher. Well, everybody was, I guess, just scared to do anything until ABARES made their announcement. ABARES came out with their latest quarterly estimate. They raised that crop that's pretty much in the bin now up over 2 million tons. They're at 34 million tons now. Very, very nice big crop. That's 31% above a year ago and well above their 10-year average down there. So things are looking pretty good. And all of a sudden, the world balance sheet, doesn't look great, but it certainly feels a lot better than it did last week. So that's a good thing. And that's just one more thing that kind of weighs on world prices right now. You can see that the next slide there real quick, Dave. Nothing really has changed there. Argentina, we say P&W white is actually below that, but that's a very, very small market. Not a lot gets traded there. Argentina is really the low FOB guy in the world right now. You see Russia all the way up at 252. Ukraine's a little bit below that. And there's the good old United States. HRW Gulf is just not, it's just not competitive. And I don't expect that will be anytime soon. So
well, you wonder, we've talked about it on this call, but you wonder not just for wheat, but really maybe even more so for soybeans and corn. How much of the export program that we have seen so far was just the world buyer getting the cupboards full before the tariffs fly?
Yeah.
Remember point. Our election was right while we were harvesting last year's crop. And you wonder just how much of this export business that we've seen. We've had decent export pace on just about everything so far. You wonder how much of that was front loaded. So I guess we are getting ready to see because the tariffs be a flying. Thank you, Scotty.
They are.
So remember, we talked about the big rally in prices, and we talked about corn in the prior weeks dragging up everything else higher, and it dragged soybeans higher. So it probably makes sense that when corn started coming down the hill, maybe soybeans fell also, but not nearly so much. Soybean prices really down 3% last week. Some of that was this acreage mix, and you could see on the third bullet there, the USDA Outlook Conference estimates soybean planted area down 3 million acres. To 84 million. Again, maybe a little bit more than the trade was expecting, but not significantly, but still a pretty big shift in that planted area. So I think that's probably one of the bigger things driving this. Remember, China, I believe, has announced another 10% or 10% import duty on U.S. soybeans now. Now, we're kind of already at the end of our export season anyway, and I think China has already bought and shipped from us what they're planning to buy. But this isn't going to bode well for exports going forward, or certainly out into the next crop cycle. And I think that is also something that is weighing on the price of soybeans, those Chinese retaliatory tariffs. So what does all this mean? Well, the one thing, and we pointed this out last week on Bill's numbers, which this is again, but again, the same 84 million acres. One of the things that the market's going to be watching is a little bit more important that we're going to have good weather this growing season, since we're growing on a smaller acreage base. And again, I think the fear that the market has today, as we await this March 31st planting intentions report, is that the acreage shift is even larger than what the Outlook Conference tells us, that we're going to see even more corn acres at the expense of beans, which theoretically could tighten up the soybean balance sheet. Now, 7.5% of use is still plenty, but that 53, while it might be trend yields, that's also a new record. Never made 53 bushel beans before. So others would point to this export line. With all the tariffs flying and the mother of all record crops in South America that they're starting to harvest in Brazil. There we go. Might be hard to export 1.8 million bushels of beans or billion bushels of beans next year. But again, that is way, way, way down the road. Here's your Mato Grosso soybean harvest slide. Mato Grosso, Brazil, again, caught back up to the 5-year average. Doesn't look like much of an issue at all. And in the veg oil markets, you know, palm oil, which was up $50 the week prior, lost about half of that back here last week. But Argentine bean oil was down also. You still have got palm oil at $100 premium. And again, we are seeing exports suffer and suffer mightily, to the point where you would normally expect stocks to drop in the month of February for palm oil, because again, it's one of the lowest production. It is the lowest production month of the year. Typically, the Stabro boys are saying, hey, actually, we might not decline stocks. We might actually grow them just a wee tiny little bit. That would be pretty counter-seasonal. And the reason is we're just beating the hell out of exports. India is the world's largest buyer. Their January palm oil imports were at a 14-year low. Palm oil is just too expensive. So we will see where this market goes. You can see Indonesia finally gave us their January data, or they didn't actually give us the January data yet. This is from one of the export houses. Their exports are down a staggering 30% from the same month a year ago. So let's move on and have Jay tell us what's going on in the dairy space. What do you got for us today, Jay?
Yeah, we've got a report that's going to come out today. We've got the dairy products report that will come out later on this afternoon. Again, that report really summarizes how much stuff we made, how much cheese, how much butter. So we're going to be waiting on that. We also have a GDT trade event today, which gives us some sort of indication on international prices and our competitiveness within that market. As Scott mentioned on the wheat side, talk about seasonality, where you're at in wheat. We're in the same thing in the dairy complex too. So again, even though there's a blizzard forecasted here in the great state of Minnesota coming across Iowa, it is spring elsewhere within the country. So seasoning milk production is starting to pick back up as we move from winter to spring. And it's showing up in the cash basis numbers right now for milk. So we've got lower prices this week than we had last week, and then versus prior year. So that's not unusual this time of year. Again, as milk production starts to ramp up, we're getting more milk and prices generally go down on the cash side. In the cheddar cheese, on the cheese side, I focused on cheddar cheese because that's what's traded at CME. Right now, there's rumors of exports slowing down. We've been talking about exports in cheese. We had a record export number here in the U.S. for 2024, and we've been talking about that for quite some time. And that has been very supportive of the market. Now, going back to last Friday, rumors were kind of out in the marketplace that exports are starting to slow down. And you saw a big price decline on the spot block cheese and really for Q2 futures also moving down about a dime. So it really, as we've talked about in the past, I've really been focused on those export numbers and really kind of supporting the cheese values. Well, now we're starting to see some of that erode as we go forward. On the butter front, plainer cream multiples are extremely inexpensive for this time of year. We are extremely competitive on international prices. And we'll see how that plays out. Now, the spread between us and the international prices, we're not really geared up to export butter. Butter's mostly a domestic market here in the U.S. On the
We're a net
cheese
importer
side,
generally, aren't we?
yeah, we generally import butter, and we have been for quite some time. On the export side, though, we do export a lot of cheese. As I was talking about before, and here on Tariff Tuesday, I haven't seen the list. I know Mexico's, we're talking about tariffs this morning, and U.S., we've imposed our tariffs, and I know Mexico is going to counter those tariffs. There's no list that I've seen as of right now, as we're recording on the published items for Mexico. But keep in mind, on cheese, we export about 40% of our cheese into the Mexican market. So we'll see how this plays out. But
So
go ahead.
did you say 40% of our production is exported to Mexico, or 40% of our total cheese exports go to Mexico?
40% of our total cheese exports
Okay.
go to Mexico. So it's their number one customer on the export side. So obviously, with tariffs coming in place, and like I said before, I haven't seen the list yet coming out of Mexico. It has been announced, and we'll probably see a list from Mexico later on this afternoon. We'll see if cheese is going to be included in the retaliatory tariffs that we're more than likely going to see going forward. So that's where we're at right now.
I think the Mexican president has said that they have a plan A, plan B, a plan C, and even a plan D, but she didn't announce yet what those were, but you're probably right. We'll hear about that here.
Yeah.
We'll hear about that shortly. So strap in. I like the Tariff Tuesday. So
yes, sir.
This slide is in the deck every week. I thought I probably should have put a header up there that says proof that commodities do not like tariffs. There's only two that ticked on the positive side, and one of them's not a commodity. It's the U.S. dollar index. The only commodity that was higher last week of the stuff that we track on this sheet was butter. Everything else was down. Commodity markets specifically, do not like tariffs. So here's the Commitment of Traders report, and I wanted to talk about this. We saw liquidation in bean oil that we've been talking about, and we saw some liquidation of this very large corn short position that the spec had. Remember last week they were over 350,000 contracts long, in the corn market. Sold off about 16 of that, but remember, this is last Friday's snapshot that was only through close of trade last Tuesday. I think when you look at the market action Wednesday, Thursday, Friday, and yesterday, and then continuing again today, I think we're seeing a very large, fast liquidation of that. We'll get our next snapshot this Friday, but I think you had the speculator leaning the wrong direction when it comes to corn prices, especially with the advent of tariffs. So I think a lot of stuff has gotten overshadowed here by the tariff thing, but South American weather is still important, and I think Paige has got some good news for you here.
Yeah, and flipping past the U.S. slides, we probably ought to start putting in at least like the drought monitor and stuff as the calendar has now rolled over to March. We're going to want to make sure that the Corn Belt is getting some good rains over the next few weeks to kind of set us up well for planting. I know Jay mentioned up there they're in a blizzard warning. It's raining here today. I think technically we might be in a blizzard warning, but I don't think it's going to snow. So the Corn Belt has been getting a good amount of moisture. We have been very, very dry in the Midwest. So a little bit of good news about U.S. weather. And even more good news about South American weather. So I was a little bit worried when I pulled up this map yesterday morning and saw all those kind of heavier rains across central Brazil. But a lot of that soybean crop has already been harvested. I think that kind of inched its way ahead of average pace. Same with safrinha corn planting. So I don't think those are going to pose too much of a problem at this point. And honestly, for the safrinha corn that is planted, these rains are probably pretty good. But really kind of the star of the show this week on this map is that Argentine rain. That big blob of rain with red and blues and yellows. We love to see that. They got better rains than expected over this past weekend. You could argue that those rains would be a little bit more beneficial if they were a little bit farther north, but I don't think anyone's going to be complaining about rains in Argentina at this point.
Big swath of their grain belt got rain. Yep.
Yep. And if you want to pop forward to the forecasts, Brazil's still looking pretty good. Luckily, there still seems to be some widespread rain forecasted in that 7-day forecast for Argentina. Definitely more minor rains, not very widespread, probably not going to hit a lot of those growing regions in the 14-day. But we all know that that 14-day forecast can change rapidly. So hopefully those 7-day rains come to fruition, get some more rain on this crop, and get it looking in a little bit better shape. We probably, only have 3-ish more weeks of this rain being beneficial.
Well, I tell you what, I'm sitting here looking at those rains in the last 7-day and then what's on this 7-day forecast. And I would be a little surprised if that doesn't get us to the finish line. If that's not just maybe a finishing rain right there. Probably ought to ask Dr. Cordonnier when we have our call with him here this morning. But if this rain that's in the 7-day happens, that probably gets us to the finish line.
Perfect. So
or at least awful close to it.
Yeah, things are definitely looking better for Argentina.
Mm-hmm. All right. Well, thank you, Paige. Thank you for everybody participating and listening here today. There's our contact info. Love to hear from you. And as always, be careful out there.